for joining us for our latest series around cryptocurrencies and digital assets. I'm Libby Hall, Director of Communications for Oyster Consulting. The landscape for digital assets, cryptocurrencies, and blockchain projects has become extremely complex. Regulators, developers, and exchanges are struggling to provide clarity and guardrails without limiting innovation and profitability. Today, Ed Wegener, a managing director of Oyster Consulting, is joined by Steve Gannon, a partner at the law firm of Davis Wright and Tremaine. Steve advises the banking and digital asset industries on regulatory and strategic matters, from public policy and corporate governance to litigation, compliance, and administrative actions. You can find more information about Ed and Steve by visiting our website at oysterllc.com. In today's podcast, Steve and Ed walk through the evolution of the crypto asset class, including some of the common types of digital assets and digital asset projects. Let's get started. Ed?
All right, thank you, Libby, and hello, everyone. I'm Ed Wegener, and I am the head of governance, risk, and compliance here at Oyster Consulting. I want to welcome you to what will be a series of podcasts regarding the evolution of regulation and compliance in the digital asset world. I first became involved in the digital asset space while at FINRA, where I was part of their digital asset working group, along with one of my current Oyster colleagues, Lisa Robinson. And since that time, the landscape for digital assets, cryptocurrencies, and blockchain projects have become extremely complex. And to help us understand that current landscape, we're really fortunate to have Steve Gannon joining us today. Steve is a partner at the law firm of Davis Wright Tremaine. Steve's focus includes helping the industry adapt to and stay on top of the burgeoning fintech and digital asset spaces, and that's why we're extremely happy to have him joining us today. Welcome, Steve.
Ed, it's great to be here. I'm looking forward to the conversation.
So maybe by way of background, can you talk about the evolution of this asset class, including some of the common types of digital assets and digital asset projects you've come across?
Sure. So really, obviously, it started way back during the time of the financial crisis when Satoshi Nakamoto wrote his famous white paper and got Bitcoin started. But we're going to advance actually a number of years rather than go through all of the legend and lore of those early years and how the first pizza was bought for something like 40 Bitcoin or something along those lines. And we're going to bring it up to present day. So Bitcoin and related cryptocurrencies, digital assets such as Ethereum, went through a series of ups and downs. There was a well-known crypto winter in 2018 and 2019, but since then there's been sort of a steady build in both interest and adaptability and use cases and projects and essentially value and the ability of crypto to store value. So that's on the financial side. It would take way too long for me to articulate all the different tokens, coins, etc. that are out there. But one of the things that caused regulation to develop, and again, I'm focused on the financial services side, but one of the things that began to cause regulation to really accelerate is the initial coin offering craze of 2018 and 2019. And that was a period of time in which these kinds of assets were first coming to the public's attention. There were lots of promoters out there that were really quite unscrupulous. They were essentially selling people vaporware, but in the guise of initial coin offerings, lots of frauds, lots of what was called rug pulls. The offerings would be made. People would get these, in air quotes now, coins into their wallet. They would send in their money and the promoter would disappear. The SEC came down, as they should have, very hard on those because they were fraud. And from that time, the regulatory world has developed in a number of different dimensions. And I would say the difficulty for people who are in this space is the regulatory agendas are developing all at the same time and in different ways. One of the things that has been a real area of contention is what exactly is a digital asset? Is it a commodity? Is it a security? Is it a currency? Is it something else? Is it something new that we've never seen before and for which a new regulatory scheme needs to be developed? The CFTC and the SEC have two very, very different visions of that. The CFTC certainly believes that in many cases, these assets have characteristics of commodities. The SEC says, not so fast. We think that's within our regulatory perimeter, that these are assets that are traded, that they meet the three elements of the Howey test, and that therefore, in many, if not most cases, they're securities and they should be regulated as securities. The industry, by the way, is that they're in a space where they're saying, we don't necessarily think they're either. They're a new asset class for which a new regulatory scheme should be developed, and that puts it right in the laps of Congress. It is highly unlikely that without new congressional authority, the regulators are going to develop a new regulatory scheme by notice and comment out of this. It could happen, but I wouldn't be holding my breath. It's going to take congressional legislation, and that these days is very, very hard to come by. So it's going to be sort of grinded out on the front lines, at least for the next couple of years.
No, absolutely. And that's a good segue into the regulatory environment. But maybe before we step into the regulatory space and what's happening now and what we foresee in the future, it would be helpful to just talk about some of the current players in the digital asset ecosystem. There's a lot of individuals and entities involved in this space, and I think it'd be helpful to understand those different players and the roles that they play.
Sure. Well, I'm going to divide them into three, and that would be those who are essentially developers of projects. And I'm going to go all the way back to Bitcoin for this, even though there is no one person or one structure that, in air quotes again, owns Bitcoin. And we'll talk about those projects a little bit. Then we'll talk about those who provide facilities to trade or to hold in different ways those kinds of assets. So we're talking here about exchanges. We're talking about funds that hold these assets and may want to expand the aperture through which they can be invested. And then thirdly, we'll talk about what I will call supporters of the ecosystem, which would be venture capital firms, hedge funds, certainly some institutional players, wealthy individuals of different stripes. So let's go back to the beginning and talk about project owners. Those are the folks who let me not call them owners. Let me call them sponsors. So project sponsors are the ones who, through the use of innovation, creativity, technology, etc., have thought of and who are able to get the technology in enough shape that they can create use cases for the blockchain that are financial in nature. The easiest ones to think of are Bitcoin and Ethereum, because they're the ones that are used almost as substitutes for securities. They have, by the way, there's no necessarily inherent value in them other than the belief that their holders and future holders have in the fact that they do have value and that they are used as vehicles to buy or sell something else. So they're not backed by the full faith and credit of the US government. There's no government insurance. Governments don't stand behind them in any way, but nonetheless, they're fast enough and they're efficient enough that they have a community of users, a very large community of users, that use them as stores of value and as instruments of exchange so that they can be used to buy and sell objects in the real world, or buy and sell just themselves to see trade like you would trade currencies, or to see if there are other elements, other real world things that they can buy, which you can buy, refrigerators, cars, etc., that have real hard value. And those are developing over time, and they have different features, they have different reward systems, they have different ways in which they accrue value. And I would say there are probably at least a half a dozen other coins or tokens out there besides Bitcoin or Ethereum that are popularly used. Now, there are literally thousands of coins out there that are traded on different types of exchanges literally every day, but they're not ones that are anywhere close to the mainstream. So we're gonna put them to one side for a moment. Not to say that they don't have project sponsors that believe in them, but the main ones I think are what we should be concerned about these days. Now, I'm going to pause just for a moment to drop a footnote, because while you haven't asked this, I'm going to offer it anyway. A lot of folks say, well, wait a minute. Yeah, okay, I get it. You've got these cryptocurrencies, but aren't they things that criminals use? Don't criminals always want, they hack into your computer and they want you to pay a ransom, and the ransom always has to be in Bitcoin or something else because they can quickly transfer it around the world. To some extent, that is true. Of course, the most popular instrument for the use of criminality and criminals is the US dollar. And we're not talking about banning the US dollar. But the thing that's good about these digital assets, even though criminals are finding them more and more popular and are trying to use them more, you can build security around them in a way that it's not bulletproof now, but there are tools out there that would make it very difficult for criminals to penetrate. And if they do penetrate, keep in mind, these things only exist on a blockchain. In order for them to have value, they have to be on a blockchain somewhere. And if they are, they can be traced and they can be found. So you can't hide the blockchain. It simply exists out there. Now you can try to separate the currencies. You can send them through mixers and tumblers, etc. But the technology is getting good enough that this form, if you will, of currency can be traced much easier than US dollars. So there's improvement, I think, to be done in that space. So those are the project owners and developers. Now let's talk about those who are the intermediaries, that is the exchanges, and those who are essentially have established funds. So a couple of types of folks there. One, there's what I would call the standard centralized exchange. The best known of that ilk, if you will, that stripe, is Coinbase. Coinbase is a place where you can go to trade and buy and sell securities. They take the position they will not list anything on their exchange that is a security. The SEC disagrees with that, and we'll maybe get to this later, but in the Wahi case, they're litigating that very issue, whether some of the tokens, 9 specifically, that were listed on Coinbase were in fact securities. But anyway, getting on to those entities, and there are more than just Coinbase. The issue, of course, is, are they real exchanges? Are they, for example, are they alternative trading systems? Are they actual exchanges that should be registered as exchanges with the SEC? Of course, they take the position, no, that's not the case. The SEC feels differently, and they say, yes, you should be registered as an exchange. In fact, Gary Gensler has been out there repeatedly talking about how intermediaries should come in, talk to the SEC, get registered, and all will be well. However, right now there's been no appetite for the centralized exchanges to come in. Then there's something called decentralized exchanges. So decentralized exchanges operate only by smart contracts. There are no human beings that are really interacting in any way in connection with the trading. It's completely the execution of smart contracts. They're probably less likely to be the subject of registration, but because there's no centralized authority in these decentralized exchanges, examples of those would be Uniswap, PancakeSwap, etc., SushiSwap. I don't know why they have these silly names, but they do, where it's essentially a peer-to-peer venue for folks to come together and decide to trade with one another on a peer-to-peer basis. So they're quite popular, but they're limited by the fact that they don't necessarily have a lot of liquidity. You only have essentially the actual coins themselves being traded in, or stable coins. So the volume is less, the liquidity is less, but they still do exist, and they're fairly popular. They will be very, very difficult to regulate, in part because there really isn't. It's essentially trying to regulate code. There aren't people to regulate. There's no office to go to. There's no CEO of Uniswap that you can go to and take testimony from. It's decentralized and distributed. There's debate about within regulators as to whether or not they actually could get traction in there, but so far they haven't. And then finally, there's the funds and the supporters of digital asset, Grayscale being the best known. They're the ones now with a pending application for a spot market based Bitcoin ETF. They want to make obviously Bitcoin more available to the masses, if you will. And then there are many other hedge funds and funds that are investors in digital assets. However, the popularity has waned considerably from a year ago. Understandable given the price retreat and all the various disasters and related bankruptcies that have happened. But those well-known players in that space would be Elon Musk would be one of them. Anthony Scaramucci would be another, and it goes on and on. So those are the three classes of players from my point of view.
This has been a fascinating discussion. Really appreciate you joining us today. We're going to be continuing this discussion in future podcasts as these issues develop. We're in early March right now, and really appreciate you joining us and hope you can join us again.
Thanks, everyone, for listening. If you'd like to learn more about our experts and how Oyster can help your firm, visit our website at oysterllc.com. And if you like what you heard today, follow us on whatever platform you listen to and give us a review. Reviews make it easier for people to find us. Have a great day.